analysis of the IPO for SureVin BPO. First, the basics. SureVin is an SME IPO to be listed on the NSE Emerge stock exchange. The IPO is open from July 28th, 2017 to August 1st, 2017. So it's just a couple of days away, and you can buy it from any demat account or a brokerage account. The face value of the share is rupees 10 per share, and the offer value is rupees 40 per share. The minimum order quantity is 3,000 shares, and therefore the minimum investment amount is 1.2 lakhs. I will be analyzing the IPO on 4 parameters as shown here: ownership structure, industry and policy outlook, historical financials, and usage of funds and future outlook. For each of these 4 parameters, I will be giving a rating from 0 to 10, and then an average overall rating of out of 10. This rating system is my proprietary rating system called the Stockometer. SureVin is a Gupta family-owned business running out of Bhopal. It's after the IPO, the family will continue to hold 24.75 lakh shares, which is 73% of the total shares. Thus, 27% of the shares are on offer, which translates to 9,12,000 shares at an offer price of 40 rupees per share, which means the size of the IPO is 3.65 crores. So it's a small IPO. And the offered valuation of the company is rupees 13.5 crores at an estimated PE ratio of 9x. So the price to earnings ratio is 9x. On the ownership structure, the Stockometer is 6 out of 10. This is because of the good, strong ownership structure which continues after the IPO, which is healthy. The family also has a lock-in period on most of its shares until 2019, which is required by SEBI, which means that they will stay loyal to the company and will continue in the best interests of the shareholders. Next parameter is industry and policy outlook. SureVin BPO is in the IT and IT services business, as its name suggests. The company is also claiming that it offers a wide variety of services, from IT solution, business services, outsourcing services, digital solutions, marketing, data enrichment, HR consulting, and even laying fiber cabling to large telecom companies. So even though they're claiming much of this, but I don't see a lot of this reflected in the financials, because the financials are mainly about the call center and the BPO business, as we'll see in the next slide. So the positive factors in favor of SureVin BPO are that they're in the IT and IT services business, which is a forward-looking industry segment, and India is a global leader in it. There is a large domestic market to be tapped into. There is support by most state governments for IT and technology-based companies. But on the negative side, and there are quite a few negative sides here, IT and IT services has 16,000 companies competing, so it's a highly, highly competitive market. SureVin sells mostly in the domestic market. Domestic market tends to be price sensitive, low margin, and very high competition. The largest market in the world is the US market, but that is facing protectionism with Donald Trump wanting to protect the domestic markets, and therefore you can see that with Infosys and TCS and Tech Mahindra facing some trouble in the US market. For SureVin, 95% of the revenue is coming from the call center business. So like in the previous slide, we were seeing that they're claiming they have many different businesses, but 95% of their revenue is coming from the call center business. SureVin has not provided much information on how to expand into some of these other areas or what are the expansion plans. Therefore, I find that there is nothing much unique about the company or its product. So therefore, on the Stockometer for the industry and policy outlook, it is 5 out of 10. My third parameter is historical financials. I've listed here the financials for the last 5 years, which I've picked up from the prospectus. The first thing to notice here is that the sales, costs, and profits have been flat for the last 2 years, which is not a good sign. So sales are at 15.3 crores for this year and last year. Expenses are 12.5 this year and 12.3 last year in 2015-16, and profit is 1.5 for 16-17 and 1.8 crores for 2015-16. So in fact, profit has declined marginally. They also write that their own sales come from a handful of customers. They don't have many customers. So it is a high risk strategy that they're following. They do have 4.3 crores of trade receivables, which is not a good thing. So on 15.3 crores of sales, they have 4.3 crores of receivables. So almost 30% is trade receivables. So this is money that they are supposed to get from customers. That means they provide a lot of credit to their own customers. So the payable cycle can be 30, 60, 90, or even 180 days, which is not always good for a business. And they do have 1.5 crores of short-term debt and long-term debt. So this is also a large debt amount, given that their expense structure is about 12.5 crores. Given all of this, for the historical financials, I'm going to give them a 2 out of 10. Our last parameter is the usage of funds and the future outlook. The company has stated in its prospectus that it's going to utilize the 3.565 crores towards working capital, general corporate expenses, and the meeting the issue expenses. The working capital need, as per their prospectus, is actually 3.69 crores, which means that the company works on a lot of credit. They give a lot of credit to its customers, like I said earlier, and it might result in bad debt later. And significantly, the banks have given them a credit line of only 50 lakhs. So even though their working capital requirement is 3.69 crores. Additionally, and very importantly, in their usage of funds and future outlook, they actually don't talk about expansion into new sectors, or that they're going to utilize the money for new technologies or new areas that to expand into, which is again not a very good thing, because they're basically raising money to sustain their current business. So on the stockometer for usage of funds and future outlook, I'm going to give them a 2 out of 10 again, and hence an overall average stockometer rating is a 3.75 out of 10. And as that is below average. So I would not recommend an investment in this IPO. I think it's high risk. I think the company's financials are not looking very good for the last 2 years. However, if you have a large portfolio, so if you have a portfolio of 50, 60 lakhs, and if you want to take a risk on the listing gains of SureVin, then sure, you can go ahead and maybe invest, and but do make sure that you sell out after getting the listing gains. I hope you enjoyed the video. I will be back soon to give you more high value analysis of IPOs. Please do subscribe, like, or share this video, and I will see you next time. Thank you very much.